let's have a look at this. We'll start with Bitcoin as always. Let me have a look at the XO charts first, actually. I haven't looked at it all weekend. I just haven't looked at XO charts, so I don't really know what's going on. Okay, we had some, when the price dropped, we had liquidation bubbles. That's nice. It went up. Liquidation, liquidation, liquidation. Liquidation, 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 liquidation. No liquidation on that second swing failure. Look at that. That's interesting. No liquidation down here. What is this? It's like longs, huh? It's kind of half and half, but look at that increase in OI. Price pushes up. You see that wick on the candle? It was sold and then someone longed into that. It's a buying tail on that candle. That's a leverage long. Shorts closing, shorts closing, shorts closing. Longs entering. Longs closing. Longs entering. Shorts closing. This is shorts entering here. Not better, not much. A bit of closing on both sides. A bit of longing, still longing. I think the longing is increasing. Okay, so we have a little bit of longing here on leverage, which is quite interesting. That's what I wanted to see. Are people starting to long? And it does look like there's a little bit of longing here. There's also a little bit of bullish divergence. Okay, so you can see the CVD. The line is lower. This is a lower low on the CVD. Okay, and you can see how the price is slightly higher. You see from this lines up with this low here. So that's a slightly higher price. This is a slightly lower CVD. So we have a little bit of bullish divergence here, which means that the market sales are being absorbed by limit longs. Limit longs don't appear on this data. This is just market orders. XO chart only shows market orders, and so the only way to see if you have a bigger limits absorbing the price is with the CVD divergence. And right now I'm seeing some bullish CVD divergences. Not crazy, but it's enough to take note. So there's definitely no short. I wouldn't short this just because of what I'm seeing, and also just looking at the way the orders are coming in, I can see some longs are coming in. Okay, that's quite interesting. You want to kind of see what other people are doing, and it gives you confidence to do the same thing. If we were seeing a lot of shorting going on here, then you'd be thinking to yourself, damn, the whole market is shorting. I've got to be careful. But actually what I'm starting to see now is there's some longing happening here. Okay, so that kind of, look at this, see, increase in OI, increase in price, and you've got some order imbalances. See these black squares, which means that the orders weren't filled, and it created small gaps because there weren't any sell orders as the price ascended. So you have these gaps that are formed because there aren't any limit sells. That's why the price slips up. This big one here, look, it created, look at when it went up, you can see it created a 1.4 million gap So when the price actually came back, what happens is those imbalances, they will offer support as the price comes back. So when you see imbalances like that, like here, you see this one? Look at all these imbalances. And so as the price comes back down, it finds a little bit of support because it's trying to now fill those prices. Okay, and actually when I'm looking at it, it did offer support. These two green bars all the way down to here, the price held almost right up to there. That's interesting. Okay, that's going to influence our bias because we can see now that there's some bullish divergences on the local time frame. All right, I'll keep that chart open. Let me get rid of that. I took a trade yesterday. I took a short, which I got stopped out, which I was doing on the stream. And then I took another short yesterday. And I took a short yesterday. I didn't post it because it was really late. But basically, I shorted the daily open, which was that top of that green candle. It was here. And it just went down. And I just took profit as it went down. And then I'm out of that trade because that was it. Let me have a look. What do we have? Okay. All right, look at that. Interesting, huh? So that was from yesterday. Where's my range pool? I probably deleted it. Let me do it again. Where's my volume? There it is. And then let me do my volume. Somewhere here. See if the volume's changed at all. Okay, the point of control has moved up slightly. Because the price is above it, that's okay. And you can see how the price went up yesterday. So there was two things the price could have done yesterday. As always, it can go up or down. And I tried to short, but actually the trade to be had was a long. That's fine. It was actually a long from down here. You see, that was the trade to be had, really. Longing here was possible also. And basically what happened was as the price closed back above the point of control, you can see there was a little back test and it went all the way up to the high volume node that I marked off. And then I took that short. I didn't have it planned, but I knew it was a good area to short, but I was just waiting for the end of the day. And so as the day closed, you see how the price went all the way back down to the point of control. And I took profit at the point of control. So even though I didn't have a planned trade, these levels are really important. You can see I was kind of looking at these levels and seeing how the price would move. And look, it's kind of done what I've imagined, which is really good to see. Gives me confidence that I'm not mad. And obviously you're looking at two situations. Yeah, I'm not worried that this one didn't work because I was contemplating an up move and I was contemplating a down move. Like if this was the up move, which kind of followed my idea, and the down move didn't happen because it was actually bullish. It wasn't bearish yesterday. Okay. And if it was bearish, then this is what would have happened. Okay. Potentially. It's just two ideas that I had. And one of them came to pass and I traded one of them because even though I didn't have a short planned up there, I did take the short yesterday. But because it wasn't planned, I didn't post it because I don't want people thinking that, yeah, anyway. So let's just get rid of all of that now. Delete all this shit. All right. And then we've got our range pool. Let's just make sure that the nodes are correct. So the point of control has moved up a little bit. It's interesting to see. The high volume node has potentially moved down a little bit. The value area low has moved up. The value area high has moved down. So we have a slightly smaller range, only slightly. A slight adjustment in these nodes. I'm going to put a node up there as well. That's a high volume node up there too. So it's good to have these nodes in position. Okay. And I can get rid of that. Good morning, Dan. Good morning. Oh my God, it's a lot of people here today. Damn. Welcome. Well, if you have questions, you know, just feel free to write them down. I'm keeping an eye on the chat. And for Dan and Craig, if you guys came late, I just went over exo charts and I just explained that the recap is, so you don't have to go back and watch it, is that we're seeing a little bit of bullish divergence right now. The CVD is slightly lower, the price is slightly higher, okay? And we are seeing longs open in this current range, this local range that's been formed over the last few hours. There are longs that are opening, so that's quite interesting to see. All right. The other thing that I was paying attention to, which is always good to keep an eye on, is the funding rate. And when I'm looking at the funding rate now, it's neutral. Okay, the funding rate is neutral. I'm going to show you. I'm going to show everyone what I'm talking about. And it's good to keep an eye on the funding rate. If no one's familiar with this, if you are, then this is going to be boring for you. But for anyone who isn't, this is the funding rate. So this is the amount of interest that is paid by people leveraging every 8 hours. And this is the one that I'm focused on, the Bybit one, although not all the exchanges are neutral. Okay, so anything above 0.01%, you see that? It's in black. That is neutral. So there's no bias. So a neutral funding rate, it still favors shorts because longs still have to pay 0.01% every 8 hours and shorts are still getting paid. So if you're in a short right now on Bybit, you're still getting paid every 8 hours. You're getting paid 0.01% for having your short open. Okay, but that's a neutral funding. You see on BitMEX, it's neutral. And then here you can see on Binance, it's slightly bearish, very slightly. So I wouldn't necessarily consider that in the context of what we were seeing last week. OKX is slightly more bearish, but effectively you could argue that the funding rate is almost reset. And in the context of this Bitcoin bull market, you could almost argue that that's actually quite bullish because the funding rate has been flushed, the liquidity has been flushed. Okay, I think that's something interesting. So going back to the charts, and the context is really important. We're seeing bullish divergences. We have a neutral funding rate. We've broken out from this trend line. We're above the point of control. There's something else that I wanted to put into context, and I just want everyone to kind of pay attention to the daily candle and the weekly candle. So let's have a look at those. So on Sunday, I said that this bearish candle wasn't very bearish. Why? Because it only just closed underneath the PD low. I've seen this so many times where the next day it just reverses. And so you end up with some kind of reversal pattern, which is what's potentially forming here. Yesterday's candle was bullish. And the reason why it was bullish is because we were able to close quite strong. And effectively it closed above 50% of the previous candle body. Do you see this body? We closed above 50%. That's a bullish close. Okay. This whole thing is a bullish reversal. And today we've come back down potentially to back test this wick over here, or the 50% mark of the previous day. So we're having a bullish reaction on yesterday's candle at the moment. Okay. So you can see how the price has gone down. We've back tested this level, which happens to also be roughly the 50% of yesterday's body. And we're having a little bit of a bullish reaction. Okay. The other thing to bear in mind, and I mentioned this in yesterday's stream, is that we had increasing volume, and then yesterday we had decreasing volume. You see that? Decreasing volume. So you have it's a low volume drop, which is potentially it's bullish too. So we have a lot of bullish signals right now that we're seeing on the charts. The other thing that I'm seeing is that we formed a weekly candle, quite high volume. Okay, potentially a reversal candle. So never think that that's a bullish candle. That's actually a very bearish candle. In context of the highs, it's a very bearish candle. That being said, it's nicely held this previous week high. You see that? It's gone all the way down. It's like a back test. And effectively what I would say is that this is our range now. This whole weekly doji is our price range. That's what I would say. And I'm just going to mark it off now. Okay. I'll put swing failure on both ends of the tail. Okay. I would say that's your range now. That's your price range. So as long as the price now stays within these two lines, I think we're just ranging. Yeah, that's what I think. I think we can just go up and down, and we're neither going to be bullish or bearish. We're going to be range bound, but as long as we hold the range, I would suggest that we're bullish, because it would be bullish consolidation underneath resistance. That is bullish price action. Okay, so as long as we consolidate here underneath resistance, what is the resistance? Well, at the moment the resistance is the all-time high, and potentially you could argue that the resistance is the previous all-time high. But I think the problem is that we're still range bound. So even if we get bullish as we come back above there and go up, doesn't necessarily mean the price isn't going to come right back down. So which is the resistance at the moment? Well, there are levels of resistance. I think a really important level is obviously the previous bull market all-time high, but then obviously you have the current all-time high. That will act as resistance. You can't ignore it. And what you can see now in this current range is that we have two new levels of liquidity. We have this daily level at the top. We have this daily level at the bottom. These are liquidity levels. And let me see the weekly. And there you go. We also have a weekly level which lines up almost perfectly with the previous bull market all-time high. We'll mark that off as well. Okay. It's kind of where we're at now as far as the price. So as long as we're here, everything is sideways. And maybe that's good for alts. You know, we're all kind of alt fanatics. We want alts to pump. This is kind of what we want for altcoins. Does that give context on where we are and what's happening? So let me just add in my let me put all of these into higher time frame levels. This one I want to bring up. Is that right? Okay, that's fine. Oh, actually, those SFPs are wrong. Why did I put those there? there. Okay, that's fine. Previous all-time high, move that up. SFP, SFP. And where's the volume? Let me have a look at that quickly. Range, that's it. Okay, that's it. Let me zoom in a little bit now and let's have a look at the local time frame. Remember there's two buy bits here. I only really pay attention to the inverse perpetuals, Sebastian. He was referring to the funding rate. I only really pay attention to that one. Obviously this one, obviously you can see it's slightly bearish, but I think in the context of what we were seeing last week, which was 0.1%, you could argue that this is actually, relatively speaking, neutral. Okay, that's all. I'm just thinking about context, not 100% neutral, because as you can see, Bing is slightly higher, CoinX, whatever, but the ones that I'm paying attention to are the Bybit one and then this Binance one as well. Okay, that's where the big volume is. Maybe OKX as well. So it's slightly bearish. Yeah, you're absolutely right, but I don't know if we're ever going to get all the exchanges on 100% neutral at this price at 68,000. Maybe if we went down we would, but look, we're at 60. We're basically at the previous bull market all-time high, and we're seeing neutral, slightly bearish funding rate, whereas in the previous bull market it was crazy bearish. All right, so let me just quickly have a look at this. Dan is saying love to see ETH BTC. Love. No, we want to see ETH BTC to go up. So market structure. We have some things going on with market structure. Okay. On the daily time frame, we're still bullish. Which is the pivot to beat to change market structure? Probably this one here, huh? This pivot. So we're still bullish on daily. Everything on the higher time frame, medium time frame is bullish. Okay, let me just have a look at this. Look, we've got higher highs. Higher lows. Yeah, we still need to get above these wicks up here. I think that's gonna be really bullish, and it kind of looks like we're doing a little bit of an inverse head and shoulders pattern here. So potentially that previous bull market all-time high is a little bit of a neckline, and if that breaks, we're probably heading to the all-time high again. Probably. Okay, that's kind of what I'm seeing at the moment. And then what's interesting is, even though in the like the 4-hour chart, we're kind of into a little bit of a bearish market structure, on the daily chart we're still bullish. When you zoom right back down to these lower time frames, the really low time frames, we're back into bullish market structure. So if you see on the 15-minute time frame, we were making lower lows, and now we're making higher lows. Shit. Oh, God. We're making lower highs. And now we're making high highs. See that? See how the market structures on the 15-minute time frame is bullish again? When did it become bullish? Well, here really, actually. You see here, the 15-minute time frame, lower low, higher high, higher high, higher low. You started to make higher highs, higher lows. So we're back into bullish market structure on the really low time frame, and that goes up to the 30-minute. Yeah, potentially the hour, but not the 4 hour. Not the 4 hour. So you've still got like the 4 hour. You just have to get back above there. So we're turning with, that's quite good to see that the local market structure has turned, and we just have to now turn the medium time frame market structure back into bullish, and we're back into bullish market structure. So I'm thinking bullish, thinking we go up. I wouldn't mind longing the bottom here, but that may never come. Right, what is this one? Get that trend line again. Let me try something else. Hold on. That high volume node is the point of control. There's a previous range here. Let me mark that off as well. No, I'm going to rename that to range. The other thing I want to check is on XO charts. I just want to check one other thing. Usually David does this for me, but he's not done it. Oh God, what did I just do? There. I'm just going to have a look and see if we have any single prints or anything. We have some buying tails, selling tails. Nope. Okay, that's fine. What else do I want to see? I just want to see. Okay, so we have a naked. So what a naked point of control is, it's a naked daily point of control. It means it's the point of control of yesterday, and when it prints, then it's called naked. And it's called naked because it hasn't been traded through yet. So because yesterday's point of control was at about 66,400, today the price hasn't traded through, so is a naked point of control there. So you can mark that off, like for traders. That's really important place, because if the price comes down into that level, the price will react, and it can be used as an area of confluence for taking entries. So I'm going to mark that down, 66,300. A lot of lines. have it here somewhere. Okay. And then let me see if there's anything else. There's one above us up there. 73400. That's right at the top there, where the value area high is. You can also do that on the weekly time frame as well. When it touches, when the price comes through it, you see it's no longer extends. So then you know that it's been cleared. And as you can see how the price comes all the way down into this naked daily point of control, and there's always going to be a reaction. There's always a reaction on these previous volume levels which are not traded through, and so it's good to know where they are. And then you have the daily time frame, you also have the weekly time frame. So as you can see, we have the weekly has a naked as well. See that? That's a naked weekly point of control, and you can mark that off as well if you're interested. That's at 71990, so the price will react there as well. So it was 71990. Okay, so that's at the high volume node. That's quite interesting. I can't see anymore. There's ones lower down, way lower down, and then the monthly hasn't ended yet. Otherwise you can also do the monthly as well, and so that's the current point of control, but the monthly is much lower down. See that? 51,800 or whatever. All right, so that's that. Did I not mark them, David? Oh, you've got an SP. 7-8. Where did you find that SP? Yeah, I'm on 0 template. I don't know. Using the 30-minute. Let's try that. Okay, that might be better. 70825. That's been traded through, no? Oh no, it hasn't. It's held. See that? Yeah. Interesting. How it hasn't even touched it. It was front run. That's interesting. Okay. Let me mark those as well. Seven 70825. Seven 1 2 7 5. Naked points of control. Oh, that's really low, isn't it? I'm not gonna bother with those. They're quite low. All right. So we potentially have all of the areas of interest. Wait, let me see. 73450. That isn't that low. How did you see that one? Did you see that? Naked. Using the 30-minute chart. No, just leave it. I think that's fine, David. And the other thing you can do if you're interested is look at the session TPO to see if there's any more interesting levels. Change that. Just the other one. It's the order flow. It's the TPO. Oh yeah, that's the one. What's that down here? This buying tail. There you go. You've got a London. You have a London point of control here. Session point of control 65600. Anything above us? Oh, you have one up there as well. Okay. Can mark those as well. 65600. Template for that. Yeah. And one up there as well, which is the Asia session 73700. Okay. Sorry, there's a little bit of work, but that's what it is. You have to put in, you have to get all of your liquidity levels in, and then we can see where the price could react. So that's basically everything, right? That's where your liquidity is. So clearly there's a ton of liquidity at the high there. Do you see that? Look, if we get to the all-time high, how much resistance is there? You have a daily level, you have the higher local range value area high, you have this naked daily point of control, you have the value area high of this whole range, you have a naked session point of control, and obviously you've got the all-time high. You have a lot of resistance there. Okay, your next level of resistance is here with this high volume node, and it has there's a naked weekly point of control, so there will be a reaction there. You have these single prints, which is like a gap. It's like a volume gap. As the price descended, it created, you see how the price descended here? It created a gap. So basically there was no volume, it was zero. That's why they're called single prints. It wasn't zero, it's probably like, it's less than 10. It's like single digits. And so there's it's obviously, look, it's acted as resistance. You see how the price has come up, it fell, created a gap, and as the price came up, the gap was basically front run. So people were looking to short the gap, which is what happened there. Okay, so it will act as a resistance, as an area, but because it coincides with the local range value area high, there may be a little bit of resistance there. And then we've got the previous bull market all-time high. That's a psychological resistance. It's not a liquidity level, it's just a psychological level. Okay, but then we do have a weekly level which corresponds with that level, so there is actually a liquidity level there. It's the weekly level. Okay, so that's kind of what's happening with the price. right now. We're kind of going in and out of this daily level now. Why have I got another line there? Oh, it's a high volume node. Okay. And with the point of control is lower down, then these are our lower liquidity levels as well. So I think the price is, it looks like it's bullish. I can kind of see a little bit of a little consolidation range here. Potentially it's bullish. There is a trade to be had right now, just because we have an invalidation, and you'd have to have a slightly wider invalidation, but basically it's that, and it's all the way up, potentially all the way up to there. Fill the gap, react off the high volume node at the other side of the gap. The problem is that we are at the moment into this daily level, which is also a high volume node. You see that the price is still finding resistance of this high volume node. So you kind of want it to go up and then take the back test. That's kind of what you want. Or you want the price to, potentially you want it to do this, and then you can have a much smaller invalidation and hope you don't get stopped out. But really the invalidation is one of these pivots here, because once the price does get above that volume node, you don't really want it to go back down. That wouldn't be nice. I think this is the pivot to beat, actually. Let me see this one, because that would change market structure again on the local time frame. At the moment, after you put that pivot in, you made a higher high there. See, high high, high high. Probably that one. So there is a wide invalidation here, and that's a 1-to-1 trade at the moment with that current invalidation. So what we'd be looking to do is thinking about how to reduce the invalidation, which will increase the risk to reward, because we have an idea to go long, and now we just want to reduce our invalidation. That's what we want to do. Okay, this is a bit too wide. It doesn't make the trade worthwhile. It's a bit too wide. If the price came lower now, then it would be potentially it'd be more worthwhile, because you have a smaller invalidation, you've got a higher reward. See, if it came down to the point of control one more time and took the trade and it went up, then you're only looking at a risk 1 and a reward of 4 on that trade. Yeah, but right now where it is with this current invalidation, you're risking 1 and you're getting 2, so it's still okay, still acceptable, but I prefer I prefer more, and potentially you could get more if the price went up. And it's quite weird to think of it like that, but because we're into this daily level, into this high volume node, all we need to do is just flip it into support. That's all we need to do. All we need to do is just get above it, back test, and then your invalidation changes completely. It becomes like that. Because then you're not looking, once you get back above that level, you're not really looking to go down. But the problem is we do have this psychological bull market all-time high here, and we do have a weekly level which actually hasn't been touched yet. So even if we go up, you could just get a swing failure rejection off these highs. So we could range here a little bit longer. Potentially we could be ranging here a little bit longer. It's possible. This is something to bear in mind. Let me have a look at the fibs. Okay, the golden pocket comes in front of this. I mean, there is a lot of resistance on the way up. So, you know, let's not pretend that there's no resistance. So there's no straight path up. It's going to be like, we're going to be laddering up. If we do go up, potentially. It's kind of what you want to do if you're trying to get up to those highs. I think that's there's so many places to short this range. I think they're all pretty good. And they're all scalps, effectively. But you have shorts everywhere. You have one there. You have one up there. Potentially. Even the golden pocket. But I think once you get above the previous bull market all-time high, you're long. Because you're flipping a weekly level into support. I think that would be a much safer long. Get back above there, then you can just long. You have a really easy invalidation as well, because you have a weekly level there too. And it's the 50% of the fib that I've just pulled. Yeah. So there's quite a, and then you have a little bit of a gap. You see that? There's a little bit of a gap from that level to the golden pocket, which might not even hold as resistance, because then you're starting to see volume. So this might be just a little bit, potentially actually what you really want to do to long is just reclaim that. They have really easy invalidation. And then potentially it's all the way up to there. Fill the SPs, go up into that 786 high volume node and then short that. And then the top part is a wide range. It'd be quite bullish if we get up there, but then there's quite a lot of reactive liquidity levels at those highs. You see, it's quite a large range. So any one of these levels could hold the price, and then you could just fall right back down. Yeah. So potentially you'll be looking at something like this, assuming we can reclaim this previous all-time high. I think that's quite important because it's a psychological level. I don't know how this is going to behave. There. Work your way up. Down. Try and get up all the way up there. And then reject. Potentially. Or you reject anywhere lower. Like it doesn't have to go all the way up there. Any one of these lower levels the price could reject. I don't see much confluence with the golden pocket, which is this 618 to 66. This is this area. So I don't necessarily think it's going to hold as resistance. Whereas higher up, I see quite a lot of confluence there and up there. But I think probably the best short is going to be this one here, because you have quite a lot of things going on at the same place. Right at the same place. Right? That's if the price goes up. If the price starts to go down, then you have a pretty easy short long if there's a reaction at this. You have to lose the point of control. That's the problem. So potentially if we go down one more time, you could just long the point of control, but you are coming back into this weekly level and this daily level. So it could range here a little bit. So actually there's a two potential longs here. It could just be the point of control. It could be another long before the New York session. It could go down to go up. Something like that. I don't think I want to see this pivot taken, to be honest with you. I think that's a nice pivot. And you have quite a nice, look at this. It's really nice. And when you look at the way the prices come back down, it's come into the golden pocket. See? So actually, it's not a bad place to long, but you just have to have a wider invalidation. And it is possible to take a very small long, and then if you reclaim that previous all-time high, you could add, so you're not starting with a really bad position. You're starting with a good position. It's possible to do that too. But here, probably that would be your real nice long if we go down, and you'd have to take profit. See, you got a point of control, and that's really the problem. That point, the minute you lose the point of control, price could easily react, but it could easily fall right back down. That's the problem. So potentially a small invalidation, but you'd have to take your profit at the point of control just in case the price continued down like that. That would be the trouble with that. But it might not do that, because if it went up to the point of control, you also swing failure patterning these lows. So you could also get a situation where why did I do that? Where it comes like just back there to go and start working its way up. So actually maybe that's not a bad long if we go down. You'd have to see a reaction into the golden pocket. And then you don't want to see, once you get back to the point of control, if you don't take crazy profit, you just don't want to lose this 28236, because once you reclaim it, it kind of lines up with these lows here. You don't want to really you don't want to, once you come back above this pivot, once you've lost it, you don't want to come back underneath it. You don't want to go up, go above it, and then come back down. This pivot has to hold if we come back up like that. Right? These are my ideas. I don't know if that was helpful. Let's see what happens. I'm going to set some alerts now, because I will take these trades if I like the reaction, and I'm going to do it. Yeah. This one here, maybe actually this one. Let me just do this one. I might put this one as well, because I might be thinking to long the point of control too. We'll see if there's a reaction. I might take the long. That one. I think could potentially long there if we get across. got it. So and then you have your shorts higher up, and it's going to be a hard short because you won't have a swing failure, so you have to just short the reaction and hope you don't get stopped out with a local swing failure. So it's good to write down what you want to see, because you look at your phone and you'll see an alert and you're like, I don't know what that is. So just put something that you need to do, and then up here the same thing. Okay. And this is just two ideas. Anything can happen. Just two ideas on up and down if it starts to go bullish or bearish. I think if we go down, we're still going up, because I'm still feeling bullish. Because why? Because I think we're at the bottom of the range, you know, this range that I talked about. So let me just hide all of this. God, I need to sort this out. What are these lanes? I should have done this before. It's annoying. What did I do? What's that one? Okay, let me just put all of this into group. Okay, that helps. Put that in there as well. SFP, SFP. Have those single prints. Just give me a second. Just chuck them all in, actually. Okay, that's better. Oh, good morning, War. Right, let's just quickly have a look at that. That's the trades for today or whenever. That is potentially a swing failure here as well. Okay, I'll take a screenshot and then I'll post it to anyone who wants it. David, I'll post it to David. Any questions, anyone? There's quite a lot of people here. Everyone's quiet. Apart from Warchild, who just says sup. David, who just said smiley face. Any questions, anyone? Otherwise, I'm going to move on. Okay, no questions.